Q1 2023, let's talk about what's going on in the market and how that affects you. Hi, I'm Terry Bailey with Selling Utah Real Estate. So before we get into what's going on in the market, let's talk about where it's been. So the market capped out between April and May of 2022. And since then, depending on where you look, the market's dropped anywhere between 10 and 20%. And most projections were thinking that the market was going to continue to decline even more. And with a small drop in mortgage rates, we've started to see the market come back up. Now, it definitely hasn't come up that at 10 to 20%, but the market has started to find its footing. And a result of that, we've seen mortgage applications go up 30 to 40%. So more buyers are actively looking and getting into the market. Now, that does present good options for home buyers as well as home sellers. For home buyers, you can still negotiate a little bit and get a better deal. For sellers, you're probably not having to negotiate as much, but if you're looking to buy a house as well, you can probably go in, buy the house, get that set up, and leave a contingency to sell your home. You see, for the last 3 or 4 years, if you had a contingency to sell your home, your offer just wasn't going to get accepted. But now you can plan out your life a little bit better. Now, with these market shifts, there's 2 possibilities. Possibility number 1 is that the market continues to improve. It'll slowly but surely start to go back up again. For that to happen, interest rates would probably need to stay around where they're at now, maybe a little bit higher or a little bit lower, but overall they would need to stabilize. As well as on a national economy, we would need jobs to stay close to where they're at as well. But on the flip side, there's a very real possibility that interest rates take another jump and that the economy as a whole starts to pull back even more. And if that were to happen, then prices would start to drop again. And there's substantial data arguing on both sides. And although I usually like to think I know what's going on, frankly, both results seem very realistic to me. So the question then becomes, what do we do about it? And I've talked about this in some of our other videos, but make sure you have your very clear buy box. So I'll continue to buy and seller financing deals with relatively low money down and with great interest rates. And by great interest rates, I mean 3 to 4, 4.5. But my property for sure has to cash flow. And I need a minimum of a 5-year balloon. Because as a betting man, I definitely think that the market's going to be higher in 5 years than what it's at today. Now, there may be some dips, ebbs, and flows along the way, but I strongly believe that in 5 years, the market will be higher than what it's at today. And again, if the property's cash flowing, I have debt pay down, I have tax benefits, and I have some appreciation, it's a good deal for me overall. The mistake would be to do nothing, or in my opinion, invest in something else. Let's explore those options. If I do nothing, then my money just sits in the bank account, and even though we're increasing interest rates, inflation's still very real, and our country's still in $20+ trillion worth of debt. So I really don't think having my money sit in the bank is necessarily valuable. Option number 2, I put my money into stocks. And in the stock space, I still really think a lot of these companies are way overvalued, and I believe that those valuations are going to continue to contract. Now, there are other alternative methods, but I like to have my investments that are real assets. I can go over, I can touch them, I can have real renters in there that need real housing, and I can continue to have cash flow. So that's where I think the market is right now. That's where I think it's going, one of 2 options, and that's how I'm going to continue to win regardless of what takes place with market conditions. Now, I'm curious to see, what are your thoughts and what are you going to be doing to win in 2023?